What's up, guys? This is Ahyat and you're watching Ahyat Property TV. Thank you so much for tuning in. You're watching part 2 of a 12-part video series I'm doing on my review of the Malaysia's budget 2015 and how it impacts the property market. Now, we've gone through the generalities of the budget and how it is processed. Now, let's look into some specifics. So I put up this on the screen, the actual budget text. For some of you who are interested and have nothing better to do and feel like they want to review this budget, you could download this. You could just type Google in budget 2015 Malaysia and you'll get this text. So this was the 2015 budget speech, and it was announced on Friday, 10th of October 2014, and they called it Budget 2015 People Economy. Now, I want to introduce a method of learning which I find effective on me. I can't understand something if I don't know how to compare it with something else. It's like comprehension by way of differentiation. So I need to know how 2015 budget is different from maybe the year before, 2014, and that's how I comprehend something more effectively. So I just want to introduce to you guys 2015 budget. I'll explain a little bit more about it and how it compares to budget 2014. Okay. Now, in budget 2015, they had 190 items. So not all 190 items have impact to us in the property market, right? So I'm going to do this specially, exclusively for you guys, and I'm going to just unearth, I'm going to discover and highlight the items that will more likely have impact to the Malaysian market. So you don't have to go through all 190 items. You can just review these videos and find out which ones impact us as property investors or people who are interested in the property market. So there were 190 items in the budget text out from 46 pages, right? So, yep, if you don't have anything better to do, you could review 46 pages. Now, another thing that I want to highlight is some generalities of the budget. So, you could see here that there's this word called I beg to propose. Now, one thing that we need to understand, that whatever that was announced in Parliament by the government of the day about the budget, about next year's budget, right? Budget 2015 especially, it's actually just a proposal of how the government of the day is going to use the funds they have, the limited funds that they have, into how they're going to operate the government and into how they're going to develop the country, right? So they're going to look into some proposal, and it's just a proposal in Parliament. It's not going to be something carved in stone, and that's just something really maybe peculiar to Malaysia, and that's why there's a lot of lobbying on how whatever that was announced should be a little bit higher or should be a little bit lower. That's just basically how it works. Okay, that's 2015. Let's look into 2014 and just try to understand the differences so that we comprehend it more effectively. So now, Budget 2014, that's the 2014 budget speech by the Prime Minister and Minister of Finance. This one was on Friday, 25th October. It's usually on a Friday. And the title, the theme of Budget 2014 was Strengthening Economic Resilience, Accelerating Transformation, and Fulfilling Promises. So this one was announced in 2013, right after the elections in 2013. So maybe that's the more suitable theme for a budget, right? It's different from what we see in Budget 2015. And how many items does it have? 230 as compared to this year's budget of 190 items from 52 pages as compared to 46 pages, right? So that's the difference between the two for you to just comprehend it a little bit better. Of course, again, not all 230, not all 190 items have impact to us in the property market. All right, now let's look into the comparisons. I just put up this table, and all the figures that you see are in Ringgit Malaysia. So total budget for Malaysia is, for the government of Malaysia, can you imagine, it's just 273.9 billion ringgit Malaysia, right? So that's just 273 billion. If you just rounded it up to 300 billion, that would be around 100 billion US dollars. So that's how small it is. I know some companies, multinational companies, some of the largest companies in the world, they make about, 30 billion US dollars a year. So that's pretty much 1/3 of the Malaysian budget, right? And that's just from one company. This is one country, right? So from this 273.9 billion ringgit, how much is allocated for operations at 223, and how much was allocated to development of the country is 50. So by percentage, it makes more sense. 18% goes to development expenses, and 82% right here, the blue part of the pie chart, goes into operational expenses or OPEX. How does it compare to the year before? Well, this year's budget is a little above 9-10 billion from last year's 264 billion. And as you can see right here, you don't have to understand this at all, but basically the year before it was exactly 18% going into development and 82% going into OPEX. Now, if you really tracked the percentage of allocation distribution between OPEX and development expenditure of the budget of Malaysia, you could see that the percentage-wise has been on a declining trend. So it would have been above 20% in the years before. Coming down into 2015, it comes into 18%. You could do your research. All these figures are already you could find them easily, openly online. But you know what? This could signal a lot of things. Maybe in the beginning years, maybe in the 90s, early 2000s, we needed more percentage of the budget going into development, and perhaps most of the maybe compulsory or the critical infrastructure and developments have already been in place. So that's why maybe percentage-wise, development is right there at 18%. Some people reviewed, some analysts said that it takes too much to operate the government of Malaysia. I'm just highlighting some of the reviews. You might have read some of these analyses about the budget, but yeah, it depends on which media you're reading into. So some say, there's just too much going into the OPEX. We've got such a large government to operate, maybe expensive to operate, and more should go into development, into growing the infrastructure. We need more maybe rail transportation. We've got some of the basic infrastructure not in place in some of the rural areas in Malaysia, especially Sabah and Sarawak. So that's up to you to agree with or not agree with. But that's basically how it differs from 2015 to 2014. Thanks so much for viewing this video, a special video series that I'm doing for my review of the budget 2015. We're going to look into more specifics in the next videos. Thanks so much and see you guys. Bye-bye.